Hello and welcome back to the Wedding and Beyond podcast. Today we are talking with William and Marian Gonzalez. They are a dynamic husband and wife team, and I'm so excited that you're here to join us today. We're going to be talking a little bit about real estate, mortgages, and then we're going to dive in a little bit into their secrets for a happy marriage. So welcome, William and Marian.
Thank you.
I'm glad you guys were able to join us today. Why don't you go ahead and tell us a little bit about what it is you do, your company, background?
Okay, I'll start. My company's name is Legacy Mortgage Lending Corp. We're a wholesale brokerage firm. I've been doing mortgages about 30 years. Our specialty is first-time home buyers, residential, anything from a one single-family home to a 4-unit is considered residential. We do all types of lending. We do VA, we do FHA, conventional, some non-prime loans. And pretty much that's what we're geared to. I have about 12 loan officers that work for my company. We're not a large company, but we give specialized service to our clients. What we're able to provide to our clientele is variety of different products at different interest rates. So because we're wholesalers, we tend to get the better rates compared to the banks and things of that nature. We also have a variety of, our credit score requirements start around like 580, which is kind of low, for a lot of people, all the way to, of course, the higher the credit score, the better, rates you get and things of that nature. But you can buy a home with the score as low as 580.
I didn't know that. That's good information. Marian?
I am the owner and broker of record for Treasure Realty Partners. We are a small boutique shop, kind of tight-knit, just a small group of us that are primarily focused on residential sales and purchases. My passion is first-time home buyers, and I like educating buyers on the process of purchasing a new home and sellers on what the market is looking like for them to sell their home at the optimal price. And I recently started delving a little bit into commercial. It's not really my thing, but I have started getting some calls about commercial business. So I'm trying to educate myself on it and acquiring the proper tools that I need to do commercial real estate.
That's awesome. Well, we're in this pandemic, this COVID-19 era right now. Can you tell us a little bit about how that's affected the market, or what does the real estate market look like now, which you guys have been dealing with both on the real estate side, mortgage side, this buying and selling and mortgage side?
Real estate really did not stop totally. It slowed down a lot. I kind of was fortunate enough to have quite a bit of business going into the pandemic, but of course with the stay-at-home orders and different things like that, it began to slowly affect the amount of business and the amount of people that are willing to go out and look for a new home or even put their home on the market, because there's so much uncertainty about how the market is going to respond. Right. So as of yet, it hasn't had a real dramatic effect on the market. We're not seeing it impact prices too much, really, to speak of at this point. Can't say that it won't down the road, but at this time, we've seen kind of a slight drop in the market, but not anything real dramatic, because homes are selling, people are buying, just not in the same numbers that we were seeing. And this is kind of the peak of our market. March is like really when things start getting hot and heavy, and boom, COVID comes. And of course that kind of started slowing it down some. And even to the point of closings, they had to be done remotely at one point. So that was an interesting experience. I mean, to not have everybody come together at the closing table, that was real different. And so right now, where it should be really busy because the kids are out of school, quote unquote, in a normal environment, you know, and everybody's trying to make their move during the summer while the kids are out of school and that type of thing. And we're not seeing quite that level of movement for in the market like we normally would for the summer. So yeah, we're seeing some impact in that way.
But remember, we're in our market, South Florida. So South Florida, actually the pandemic made a lot of people realize that Florida is a place to live.
Really?
Because those people locked up in New York, you know, you can buy almost 2 homes here for the price of 1 home in New York City. So, you know, so I think, you know, what we're going to start seeing is a mass exodus, people leaving New York and those areas to come to live in Florida, whether it's South Florida or other parts of Florida, because, you know, people don't want to, in case they ever have to be locked up again, you want to be locked up in an apartment, you know, or, you know, whether it's living on top of each other. So, you know, so I think that, you know, a pandemic is the virus is going to eventually go away.
Right.
You know, so it's something that, you know, we know has an expiration date, one day. Don't know if it's going to be, you know, how soon or how late, but, you know, the market seems to still be chugging along, not full steam, but still moving forward. And as for mortgages, you know, it was a little rough there for a while because when they did this on every type of FHA, VA, or Fannie Mae loan, any government-backed loan, what it caused was a lot of the people who serviced the mortgages, they did not have the liquidity or the monies to support all these people not paying their mortgage. More so the taxes, the escrows, the insurance and taxes. That's what the servicers are responsible for. So by them saying, hey, the government saying, you don't have to pay your mortgages up to 12 months.
Wow.
You know, the homeowners are like, okay, I got some relief, but the servicers were left kind of hanging on the hook because they have to still make all the tax payments and the insurance payments on those homes. So they kind of corrected it a little bit with the CARES Act, and they gave them some liquidity in the markets. So now we're seeing where the mortgages is starting to ease up a little bit. They are a little tougher on self-employed people for like income. So if you're self-employed buying a home, you have to go through a couple more layers of verifying that you're still working. Like recently, because with the shutdown, you know, a lot of people a lot of businesses were closed. So, you know, lenders were not, you know, so lenders, you know, if you were on that list, the lenders were not trying to take the risk of giving you a loan and you were not able to pay it, or giving you a loan and you go into a forbearance. So, you know, so the lending is better, rates are better. They're not 1%, they're barely 2%. The 3%, yes, you know, compared to when I got in the industry where the average interest rate was 21%, you know, we're way south of that.
That's
you know
a
what I mean?
huge difference. Yeah.
But the mortgage business is doing well. I've been really busy the last few weeks. You know, things have picked up. I was really dead for a while. You know, the phone wasn't even ringing. You know, people were not thinking about getting a mortgage, but now things are getting, and I see the values really maintained.
That's good.
Yeah. The values are staying stable. So, you know, because I went through the 2006, 2007 mortgage implosion. You know what I mean? That's not what we have here.
That's great.
Well, that was based on greed and, you know, everybody, you know, maximizing the values of their homes. For the last, you know, 10 years, it's been really a steady growth in these values. So these houses are not going to lose. A house that's worth $300,000 today is not going to drop to $150.
Okay.
You know, it may drop to maybe $290 or may go up to $310.
Right. We just don't know.
You know, so it's kind of, you know, I think it's pretty stable.
Well, that's good. So based on what you guys have just seen that we've gone through, or what we're still going through with COVID-19, I mean, it's really changed the way everybody does business. But would you say that this is a buyer's market or a seller's market right now, or a little bit of both? if that's the thing.
I kind of see a little of both, of people that want to buy but not quite right now, and want to sell but not quite right now. But it's sort of teeter-tottering, back and forth. You are seeing some homes drop, but then you're seeing homes that are selling for their list price, just as if there was no COVID. So, it remains to be seen exactly how it's going to impact the market fully. But, it kind of depends on where the properties are located. So it's really kind of up in the air right now.
And we try to educate our buyers not to be insulting.
Right.
Yeah.
You're going to look at a house that's selling for $300,000. You can't offer $250,000. You know what I mean? You can offer it, but I'm going to tell the person one day you're going to be on the other end of this, and you're going to be the seller, and you're going to feel what this person's going to feel when you get at $250,000. Because sometimes there's not a fire sale going on.
Right.
It's just people are, it's all new. So it's like navigating, with a little bit of blinders on, but people are not going to give away their home. Because, they know that this has an expiration.
Especially at this time, they're not going to give away their home, especially at this time.
Right.
Interesting. I think we're all learning through this process.
Exactly.
Sure.
So with that in mind, and let's say once things get back to normal, whatever that normal is, and we have couples, one of the biggest things that couples do, one of the biggest investments they make, one of the biggest decisions they make in their marriages is purchasing a home. So what would you recommend is the first step for couples in deciding when to purchase a home?
I think, you have to start somewhere. You don't want to start, let's say you have no children and you buy a 2-1. When you get a home and now you have 3 children, so you want to find, we try to tell individuals to find like the sweet spot, maybe get the home, not of your dreams, but get a home that you can get some, build some equity in it, get to learning the home owning process. Cause when you own a home, you have to fix everything. Everything's on you. Like when you rent it, and we also don't like seeing people being mortgage poor. Where you're paying all this money for a mortgage and and you're so excited about it, that excitement wears off as things start to break and a leak here and refrigerator not working. You wake up, what's wrong with the AC? Why is it blowing warm? So we try to help people. Of course, it's ultimately their decision. We always qualify them for the maximum they can buy, but also kind of let them know, if you're used to paying $1,800 a month, to go to $25 or $26, $27 a month, you don't realize, but that's going to eat into eating meals out, a vacation here and there, movies, So, because we've been in it so long, we have our own children with grandparents, we tend to take a little bit of a parental approach.
But that's good.
It could be a little smothering, it could be a little smothering to people because we just don't want them to, this to be a decision that gives them an advantage, not a decision that's going to regress them. And financial pressures, we're going to talk about marriage, and the marriage is a lot. So we're trying to alleviate that as much as possible.
I think educating clients when it's time to buy is important because, everybody thinks, well, it's in America, it's the American dream to own a home. But a lot of people don't realize what comes with that. Even myself as a homeowner, there are days like I want to go back to renting. I'm like, because when something breaks, I can call the landlord. When it breaks, it's on you. And I think a lot of times people don't take that into consideration. So has there ever been a situation where a couple has come to you and say, we're looking to buy, and then you guys look at everything that, all their background information, let's say, and say, I don't suggest that this is the time for you?
There's been some times, predominantly they haven't been able to save money. We don't like people to use up all their monies when they first buy a home because we know there's unexpected. You can have a home inspection. You can do all those things. And, the seller has no idea that as soon as he hands you over the keys, the stove's going to stop working. Just, the stove knew, but nobody else knew, you know what I mean? So, we overall the decision is up because they're
Yes.
adults. We're definitely not going to, we like to instill hope. We like to hook up with people's faith, but it has to be realistic.
Right.
Yeah.
You know what I mean? Sometimes people say, hey, I want to show me $1 million home. What do you pay for rent? $950.
That's not
Bruh, just your lawn may cost you $950 a month, or your taxes,
Right.
you know what I mean? We try to give them a full picture because a lot of times people don't understand about the taxes.
Yeah.
Certain cities, taxes is more.
HOAs, association fees.
Insurance. If you buy a home that has no hurricane protection, you're going to pay more money for insurance.
Right.
Premium.
So we try to say, let's try to find a home that has impact windows. So at least we could start bringing that number down. So you're getting the most bang for your buck. Like, for example, you look at it when you're looking to buy a home, you may be looking at the current taxes that particular home is paying, not realizing that person's been living in that house for 20 years. When you go to move in, the county or the whatever place you're buying from is going to change. The tax millage is going to change, and you're going to be paying sometimes 2 or 3 times that price. So now you went from paying a mortgage of $1,500-$1,600 to probably paying a mortgage of $2,500-$2,700. Because it's a lot of things that we try to prepare people for. The excitement of buying a home, sometimes you don't hear us.
Right.
So then I get a call 6 months later saying, Mr. Gonzalez, my tax man said, remember, check this email I sent you, remember? Oh, I didn't know. I was like, that's what we try to prepare people, because there's a lot of pitfalls, in buying. And trust me, if you don't make your mortgage payments, they're going to take your house, they come at you. You know what I mean? So we want people to succeed.
I like that.
Right. I think the point is just not cash poor, so that when things do come up, things change. There's a shift somewhere along the line, whether it's in the home needing repairs or taxes. The insurance where insurance rates can jump on you. That happened to all of these things have happened to us.
Yes.
But when you having reserves in purchasing is so important. And we could, like William said, we can only advise, but we really hate to see people going into purchasing a home and they don't really have reserves because there's just so many unknowns.
Right.
And we work with a lot of first generational homeowners.
Wow.
So it's not they saw their mother, their parents, or their grandparents owning, where you can pass on, the pride of ownership, sprinkler systems, things that when you grow up watching your mom or dad work on a house, you kind of have a little bit of information or kind of a insight, about home ownership. So the easy part is getting the home. Yeah. The hardest part is maintaining and keeping it.
I agree. I can testify to that.
Sure.
So what would you tell us or summarize what are the steps to becoming a homeowner or in the home buying process?
It starts with me.
With the mortgage.
So you have to gotta get pre-approved, where, we look at your income, we look at your credit, we look at, do you have student loans, what kind of debt you're paying? We get a kind of an overall snapshot of where you're at financially, bank, how much money you're working with to buy, and that, and those type of things. And, and then if you're lacking or whatever you're deficient in, well, we tell you, hey, work on this. In about 2 months, we can revisit this, or sometimes it's longer, and then once I got you pre-qualified, which means pretty much you can go for start looking for a home, that's when my wife kicks in, I hand her the information, say, okay, they're qualified for 350 FHA, taxes can't be no more than this, insurance can't be no more than that, because, so they can stay within their ratios, their debt to income ratio. And then from there,
out we go looking for a home. I try to kind of preview them with properties that meet their criteria. I have them give me a whole list of criteria from bedrooms, bathrooms, garage, pool, no pool, yard, no, all these different criteria. And I try to match their criteria with various properties in the area, which can be challenging because the more criteria that you have, the fewer homes you may end up having in your price point unless you have a really large budget. So sometimes I'll throw in a few properties that don't quite meet their criteria just so they can get a kind of a overall a good view of what the market is looking like in the areas. There also, it depends on what cities and communities you're looking to be in and all that sort of thing, so that they can have a more realistic view of what they're really looking for. And we just tweak it from there, you know, have them pick out a few, we go out and look at them and, you know, I don't like this, I like that, I want more of this, I want to be over here, I want, you know, then I really, once we go out, I really get a chance to hear their heart. I try to hear their heart. What are they saying? What are the priorities? What are the can't live withouts and need, you know, that type of thing. And
trust me, she's really passionate. I'm a realtor as well, and I do not like real estate. I got my real estate license for convenience, but my wife, not because she's my wife, she really loves. She becomes part of the process. That's, you know, great. She's with them. You know, she's not gonna make a decision for them, but she's definitely, she gets their heart and she starts to really say, this is not what they're looking for. I think a better fit. You know, and sometimes people don't know what they want, so they start looking.
Yeah.
People think they know what they want. You know, sometimes people think they want a house that's 150, but really they want a house that's 250.
Oh, wow.
Yeah.
Because what they want, we will show them 150, and they're like, "Why are you showing me? We're not trying to offend you.
This is
what
you
asked for. You know, you want to have $1,000 a month mortgage payment. These are the homes that fit in that fit in that criteria. So, you know, so it's really like a teamwork. You know, we come together as a team and we attack this. There's also a misconception that what does this cost us to do this? You know, as a buyer, there's no cost from a real estate standpoint at all, especially out of pocket money. And as
upfront out of pocket.
But as in a mortgage transaction, you may pay for your credit reports like $40, and you have to pay for an appraisal.
Right.
Once you sign a contract, you pay for a home inspection, which is optional, but we strongly encourage it.
Strongly,
because, you know, they're going to find stuff.
You have to know what you're getting into.
Right.
So once you take someone out and you look at houses that are out there, then they select one, you know, this is a home that we want, then you put in an offer on that home. Is that the time when the inspection should happen, or when you suggest it happen?
The offer has to be accepted.
The offer has to be accepted.
By the seller.
Okay.
Right. Once the offer is accepted, you know, there's various timelines, but the inspection usually happens within probably 5 to 10 days. The max really is like, I think 15 days. Most home inspections happen within 5 to 10 days of the accepted offer. So that's, and it's a good thing because an inspector's actually not going to find everything. No. But they're going to be able to give you a good enough picture of what you're getting into. Okay. You know, whether the AC is at end of life, it has 5 more years, you know, or it's brand new, you know, different things like that. The roof is close to end of life. These are things that are involved in the inspection process that are very, very key. It'll tell you about the appliances, a lot of different things. So it's important. We believe it's really, really important. In fact, if you're not having a home inspection, I'm going to pretty much want to get something in writing from you that says you don't want to have a home inspection.
Because sometimes it depends. You may have a certain type of pipe behind the wall. That if there's a certain type of pipe, well, some insurance companies won't cover it. It's the type of electrical panel you may have.
Yeah.
You know, that now if you have an electrical panel that's, although it's been in the house for 25 years, 30 years, you know, it's prone to, you know, it's just because they say it's prone to maybe be a fire hazard.
Right.
Well, that's going to affect your insurance. So these are the things that we can negotiate. Doesn't necessarily mean because they found $10,000 worth of stuff wrong with the house, that might already be considered when they priced the home.
Right.
So, you know, so we like to let people know, you know, it's definitely opens the door up for negotiations, but doesn't guarantee that the seller he can maybe fix it, or he can say,
As is.
Right.
You know, it's up to you. You want it, yes or, you know what I mean? So, but it's something that you definitely
The
want to have.
inspection, yeah. And banks don't require that you have it, or the mortgage lenders don't require that you have it.
No.
FHA recommends it.
Yeah.
And in fact, you're going to sign a disclosure from FHA says for your protection, get a home inspection.
Right.
You know, and you have to check off that whether
Right.
you had one or you
Okay.
didn't. Because, you know, it's, you know, back in the day, you know, they didn't, it was never a requirement. Now it's more of a strongly recommended thing to do.
Right.
Now, once you get past the inspection period and all hearts are clear, now I will order the appraisal because I don't want you spending money on an appraisal on a property, you know, that you're not going to buy. So, you know, so I tend to pump my brakes once I get the all clear from, you know, from Marian that the seller and the buyer, we're good to go. Then I go ahead and order the appraisal. And then once the appraisal comes in, here's another thing. If it doesn't appraise, we open up for communication again to, you know, hey, let's say that there was $10,000 in repairs. And the seller said, I agree to $10,000 in repairs. I'm going to give you a credit. Now the property appraises for $10,000 less. More likely, you're not going to have your cake and eat it too.
Yeah.
So now we have to negotiate. He said, okay, I'm willing to drop my price $10,000 because of the appraisal. Because an appraisal is an opinion of value. It's not a science. Like, you know, you get 5 different appraisals, you get 5 different values. They
Potentially,
all, you know, they have the same standard of coming up with a value, but it's an opinion of value. So if for example it comes in lower, then Marian, you know, will talk to the seller, talk to, you know, to the realtor on the seller side, and we negotiate because our whole goal is to make the deal happen, and everybody comes out winning. Right. You know what I mean? You know, the seller may have overpriced the home. You know, and Marian, when she sees a home that's a little bit overpriced, she drops a seed in the other realtor saying, look, we don't see this value, you know, so there's a potential that, you know, it may come in lower. Is your seller still willing to work it out? Because we also don't want us, you know, doing an inspection on a house that, you know, we know it may not appraise. So we want to see some flexibility and some movement on both sides.
So would a bank finance or a mortgage company loan you more than the appraised value? No.
The lesser of the two, the lesser of the contract price or the appraised value, whichever is less. Say the appraised at 500 and you're buying a house for 400 is the value. So it's the lesser of the two. They're not gonna let you, you know, go out there and buy a car while you're buying a house. Doesn't work.
Okay. So once you've got the appraisal, what's next? What's the next step?
Pretty much, you know, it goes through underwriting. You know, we submitted everything to the lender. They review the appraisal. The lender also has an appraisal department that they kind of verify that the value is correct. Because remember, that piece of paper, that report is the collateral that they're going to base the decision on loaning you hundreds of thousands of dollars. So they want to make sure that there's no funny business. But pretty much, normally 99% of the time, it's accurate. And once that's done, then you get approval. We're closing. Average closing time is about 30 days. From the time you sign your contract to the time we close, 30 days. You know, if you're really, really everything, if all the stars line up correctly, 21 days. Even in this COVID environment, it's still moving pretty quickly. Yes.
That's good. Is there ever a time when someone who is pre-qualified for a loan gets to the point that they're ready to purchase and then they can't get the loan anymore? Is there any?
Unless they kept something from me, like a foreclosure, you know, the thing is that whatever you're trying to hide, the lender knows.
Yeah.
You know, so I'm like a doctor. You gotta tell me everything that's going on so I can give you the right medicine, you know, the right diagnosis of what's going on with you. So I try to, you know, ask my clients to be very transparent, you know, but normally unless you lose a job, unless you take on more debt, which we've had clients in the middle of buying a home, go out and buy something at City Furniture because they're so excited. Now they don't qualify because now you're taking on this additional debt, and so I always tell people don't do anything with your credit. Don't
quit your job.
Don't switch jobs. But we've had people switch jobs in the middle of, I got a better offer. That's great, but you should have told you, did you want to start 2 weeks from now?
Right.
You know what I mean? So, anything's possible, you know what I mean? But them not qualifying, it's very rare.
Yeah.
It's
not
rare.
usually
So
the
once you
case.
pre-qualify, you're usually pretty good unless you go and make some change to something that will affect your
We
credit.
vet them pretty well, yes. Because it's all about time, we have there's a deposit.
Yeah.
So we want to make sure that we're doing everything, ethically and doing our due diligence so that no one's wasting their time, and everybody wins at the end.
The buyer is at risk of losing their deposit if they don't perform. So it's very important that we meet the deadlines, the timelines, and the different things. There's even a loan commitment period that's usually no more than 30 days after the acceptance of the contract. So, you want to keep things moving in a, as smoothly and as on time as possible so that the buyer's deposit doesn't come at risk.
Now, there's also sometimes, you said what can kill a deal, there's the title. Sometimes when they go do title, they find out that the seller had a wife that he forgot to tell his realtor about, who applied for a second mortgage. And now, they're selling the house for $300, but the house they owe $400.
Wow.
Yeah.
So we've had all kinds of, we had a transaction.
Or even if a buyer is married and separated and think that that's enough to sign for a new house. We've had transactions where buyer and his girlfriend, or usually a girlfriend, or even on his own, thinks he can buy a home, but in the state of Florida, that wife has to sign.
Yeah, so I've literally, this sounds crazy, I've had clients, so I ain't seen that man in 20 years. I haven't been with him in 20 years. I said, well, did you ever get a divorce? No, he hasn't been. I said, well, I need him to sign this paper. He said, well, go on the corner and you'll find him. His name is Jake. And, I've had, and I've been doing this for 30 years. I can tell you stories after stories, where Jake had to, forgot he had a wife, say, look, I need you to sign this paper to, to make it legal. Because once you're married, unless you have a divorce, and even if you're getting divorced, your husband has to sign in the house until you're divorced. The state of Florida sees you as one.
Wow, that's interesting.
And sometimes you have to be careful if you bought a home. Let's say my wife owned her house before we got married. It's just her house. And now we're living together, and it's been 10 years, but now the homestead rule kicks in. Well, though I didn't, it's just a lot of things you got to be very careful, because you think I'm done with this guy. He didn't buy this house to begin with. Well, according to Florida, you could probably get away, come from under that, but you got to be careful, and that's the things that when you withhold from us, then these are surprises that, we just had a transaction too long ago where when we sold him the house, he was single. He went to list his house. No mention of a wife, that he got married, throughout the. So then we're getting ready to close, and the title company say, hey, there's a wife around. There's a wife. He said, oh yeah, I got married.
Oh wow.
Did you ever bother to tell us that you got married? So so now we had to get her involved in the last minute. Thankfully, everything went through, but it was challenging.
Things like that can definitely create issues for you. Yeah.
Right, probate, siblings on, the sale of a parent's home, and all kinds of little sticky things that can come up.
Oh, wow.
And us as a people, we don't, sometimes we have good intentions, but we don't leave our affairs in order correctly. So, there's no will, they're not deeded, we've talked about, even in case we die, our house automatically going to our children.
Yeah.
So there's, just things that, no one's taught us these things, you know what I mean? So it's not because you're doing it because you don't want to do it. You're doing it because you don't know about it.
There's that education process. Yes. The lack of education.
Yes.
You mentioned about deposits. Talk to us about that. What should people plan for, or what is the expected amount of a deposit on a home, on purchase?
It can vary. some people go by 1 or 2% of the purchase price or the list price of the home. But I've seen deposits as low as, 500, even on a couple $100,000 transaction. Not very often.
Yeah, I was just gonna
That's
say.
not, most sellers would not be happy with that amount. So, it really varies as to the amount of the deposit. Also, keeping in mind that the deposit is going towards the purchase of the home. So it's not like a deposit where you're putting it down and then you still have to, you still have to add more on top, but it's also included in the pot when you're, completing the transaction of purchasing the home.
In most real estate transactions, there's multiple offers.
Right.
So your contract, to set your contract apart, like if I'm the seller, a contract with $1,000 deposit and one with $5,000. Well, that's gonna make me more attractive. This guy's got more skin in the game. So that's pretty much what it's about.
And if I put down a deposit, or if someone puts down a deposit on a house, if they change their mind, would they lose that money? Can you change your mind once you put down a deposit?
Well, yes-ish. Yes-ish.
Yes-ish. Okay.
The inspection period is the one period where you really have kind of that latitude to get out of the transaction. It's best not to be very frivolous about that, but people have, they've said, no, I don't want the house any longer. But my recommendation is to at least do your own walkthrough type of inspection. It's not really required, but you do have the inspection period that you can kind of change your mind on the transaction.
Okay.
Yeah, be very careful. People, once you sign that contract, with or without a deposit, you're in contract.
Yeah.
And people, people don't understand this is a legal document,
Legal contract.
So, you wanted to kind of just do things the best you can to keep the transaction moving forward. If you don't like it for some reason, you're better off, going through the inspection period. You don't have to hire an inspector.
Right.
You can just go there and say, I don't like it. And that's it.
Right.
Wow.
Yeah.
But once after the inspection period, the only thing that can possibly kill the deal is a denial for the mortgage.
Right.
And you have to have a validated denial, or the appraiser not coming in.
Right.
And then, the seller can still say, I'm willing to move forward. I'll reduce the price. So, you just have to be very careful. I always tell people, go into this, take your time, make sure it's a house you want.
Don't rush to make a decision. Be sure that this is what you want. Right. Okay.
Yeah.
So when it comes to mortgages, are there different types of mortgages, and what does it take? Is there one that's better than the other?
I mean, overall, conventional mortgages are more flexible because, the mortgage insurance, the monthly PMI on any loan that you have that's above 80% drops after a certain
Can you
amount of time.
tell the audience what PMI is?
I'm sorry, private mortgage insurance. That's anything above 80% of loan to value. The bank is taking out like a little insurance policy to ensure the lender that in case you default, they're going to be made whole. But that tends to go away on a conventional loan after your value goes up or your principal comes down below 80%, at 79%. With an FHA, it stays on the whole life of the loan, the 30 years. That insurance. So, it's not really, it didn't used to be that way, but now in the environment, for the last, I would say 6 years, it's been where it doesn't go anywhere. Then you have a VA loan, which is pretty much 100% financing. It's for veterans. Like my wife and I, we both veterans. We bought our home with VA. It's a lot of benefits to it. That's my favorite loan because I think I really enjoy giving veterans, home ownership. It's personal for me. But conventional, FHA, VA. There's also a USDA, which is more for people who live in rural areas like farms, and those are also 100% financing. But certain areas only qualify.
Right. Good info. What does it take to get qualified for a loan?
To get qualified for a loan, it takes income, credit, citizenship, because if you have a visa, you're not allowed to buy in this country. That can exclude you. There's a couple things, but pretty much income, credit, and job stability. Not just income, but at least 2 years on the job. On 2 years working, not necessarily the same job,
right,
but consistently working for 2 years.
Should people who are looking to buy a home have a certain amount of money set aside prior to looking for a home?
Yes.
And what do you suggest that
Rule of
amount is?
thumb, this is a rough calculation. If you're going FHA, which requires 3.5% down, I would say you need to have between 7.5% to 8% of the purchase price as your down closing costs. For conventional, I would say it's more like 8.5% to 9%. If you're going for a 5% down loan. So if you're buying a house for $100,000, you would need about $7,500 to $8,000 to buy FHA, and about $8,500 to $9,000 to go conventional.
And do those percentages include your down payment and closing costs?
Yes, down payment, closing costs, and what they call your prepaids, like your taxes, your insurance. Now, on an FHA loan, the seller can pay up to 6% of your closing costs. Good luck with that. And on the conventional, it's 3% is the max. The seller can contribute. On an FHA, on a VA, it's pretty much unlimited. They can pay it all.
Okay. As we get ready to wrap up this section on mortgages and real estate, what advice, just from your years of experience in the business, what advice would you give couples that we may not have hit on?
I think the biggest thing is don't be afraid to see where you're at. To get started.
Right.
Starting. Pick the phone, contact someone, a professional. No one's ever ready to buy a home. I'm sorry. Just because this
rarely.
So we've all been there. I don't care if your score is at 400. Your score is not going to stay at 400 forever. Eventually, we'll work with you to get your scores. If it takes a year, 2 years, that's our desire is to really empower people with knowledge of buying a home and take away that fear of this. It's not like buying a car. This is buying a home, and sometimes, there's no such thing as a dumb question.
Right.
We were all ignorant, void of information, void of knowledge. And buying a home, we all were. So we don't want anybody to feel like they're inadequate, or they're not, they're not prepared.
Right.
Our mission is to let's sit down, let's have a conversation, let's have an introduction, and then we'll help you get from A to the closing process.
That's awesome.
I think having a short-term and long-term plan, as William mentioned earlier about young couples, kind of knowing, is this a 3-year home, a 5-year home, a 7-year home, so that if your budget doesn't accommodate the dream home, so to speak, because most people go into it wanting their dream home, but your dream home on your 3 or 5 year plan may be a condo or a townhouse, because that's what fits your budget. But they kind of have to, or it's kind of good to know what your plan is. Very few young couples really go into home buying saying this is my forever home. Very few do. So it's a good thing to kind of discuss, and they need to have some conversations, because many times the wife tells me one thing, the husband tells me something else, and so I have to kind of send them back home and listen, you guys discuss it and see what is the best plan or the best option for you.
We don't want to break up a marriage and buy a home.
I was just gonna ask, because I know buying a home is very stressful. Planning a wedding is very stressful, even though weddings are changing a little bit because of COVID-19. But would you ever advise a couple to do the two simultaneously?
Well,
buy a home whilst you're planning a wedding?
Well,
like William said, they are, they have to make their own choices. So we couldn't really say, well,
Right.
don't do it. But those are definitely highly stressful things
Yes.
to do
Yes.
at one time. I would not recommend it at all because, I mean, unless you just really are financially very, very sound, you know, and even then it's because you're making so many choices about your wedding. And at the same time, you're making all these choices of your home. And very often they're on different pages. And so trying to bring the meeting of the minds with couples for marriage and couples for a wedding and couples for a home, that's a highly stressed situation there.
I had a client like that was, you know, they came to me as they were not married, they were getting married, you know, and you know they were wanting to buy a house. I think it was in Port St. Lucie. So you know, so the more I talked to them, they're very young, amazing couple. You know, I kept saying, wow, you know, you guys are going to get married, plan on having children. I said, yeah, probably in about a year or so. I said, well, where the grandparents live? Well, they live in Miramar. I said, wow, that's like about a good 45-minute drive to drop the kids off. And the more I talk to them, they're like, no, I mean, we didn't think about that. You know what I mean? So, you know, because again, you know, like I said, you know, we have a family.
That's the parent in
you know,
you.
I'm not trying to be the dad, but I just can't avoid it. I mean, it's going to come.
Yes.
So, you know, so I told them because, you know, ideally, yes, to be married is the best thing, but in today's society, people are living together longer than people who are married.
Right.
You know what I mean? So I don't let that be a game stopper for me, but I do want them to at least look at the fact that you're getting married. You know, I treat them like they're making decisions. They are. They're both on the loan. They're both got to make this mortgage payment. Their credit's going to be affected. Yeah. You know, have you considered, you know, the bedrooms for a child that may be coming? If your parents are staying with you to come visit, is there room for them? Are you going to put them on the couch? You know, because, you know, sometimes they get so tunnel vision that I try to at least help them step away a little bit and let's see, you know, what's a better fit for your family. And the guy thanks me.
Down the road.
To this day, he still calls and says, man, I made the best decision buying in Miramar, even though it was a little bit more money. Because now his wife is pregnant. Yeah. You know, she wasn't pregnant, you know, a year ago. You know, everything now, you know, grandma and both grandparents
are nearby.
You know, because
support system.
When I try to tell him how much childcare costs, he almost flipped. He's like, 300. I said, yeah, 300 a week, man. You know, it's expensive.
A lot of people don't think about that if you've not had kids. You don't think about those expenses because you've never had to deal with it. So, and it will definitely affect. Affect everything when it comes to buying a home.
Long-term decisions.
Well, thank you guys for that. Thank you for listening to this week's episode of the Wedding and Beyond podcast. For more advice on planning your wedding and preparing for a successful marriage, make sure to like, comment, and subscribe wherever you're listening. Follow us on Instagram at the Wedding and Beyond podcast and visit our website at royaloccasionsinc.com. Be sure to tune in next week for part 2 of our conversation with William and Marian Gonzalez. Until next time.